yet, right before classes. Okay, so you sent around the sign-in sheet? All right. Yeah, yeah. All right. Now, I realized I didn't do problem 1 last week, but before we get started, I thought I would ask, are there any questions from the materials that were online? First of all, did you have any problems getting a hold of the videos? Did you have any problems with the Cali exercises, posting the fact that you did them? If you have technical problems, come see me, and I'll after class, and we'll talk about it, okay? But the seating chart should be going around. If the first week's assignment, there's no deadline on. There was a deadline for today, but if you're having tech problems, I'll waive that, so that won't be a problem. All right. So, videos were good. You can hear everything, and thank you. I'll take the very subdued response as a yes, whatever, and that will be fine. Okay. So we didn't do problem 1 last week, and problem 1 is about whether or not, let's see, problem 1 is at the end of chapter 2, and the question asks is, Honest John told Nancy debts and used a car for $900 to be paid off in 3 payments. The contract was oral. Nancy missed the second payment, and one of Honest John's employees repossessed the car and returned it to the seller. Nancy sued Honest John for conversion. Who should win? Well, let's just take a quick look at that first problem before we move on. I'm happy to allow volunteers for this first problem, but I will call on people if necessary. Take a second to review it. Sorry about the ads. What's the problem if you don't have a security interest? That's the essence of what this question is asking.
Should he have gotten a judgment and then taken back to the sheriff and had the sheriff come to repossess it?
That's exactly what he should have done, okay? So if you don't have a security interest, you are an unsecured creditor, which means that you have to engage the system by bringing a lawsuit and winning the lawsuit, getting a judgment on the person, and then levying on that judgment, getting an order of attachment, and then having the sheriff levy. If you don't do that as an unsecured creditor, what are the consequences, do you think?
You're the one that's in trouble if you go into the sender's fault.
And how are you in trouble? When you take someone's car without permission, what's that called? Theft. Grand theft, right? Or whatever we call it. Grand theft auto, and not the game. This is the real thing. So it's a felony. It's a felony. If you don't have a security interest and you try to collect using self-help repossession, and that's what we call it when you go to the debtor's house and you try to take their stuff. If it's an attempted self-help repossession and you don't have a security interest, that is illegal. You are then guilty of a crime. That crime is theft. It's a felony because it's worth, I don't know, does anybody know what the difference between misdemeanor and felony theft is in Kentucky? $500, something like that? It's pretty low, actually. So, bad choices all around. Okay, so that's the purpose of that question. Just understand that the reason you get a security interest is that it engages a whole set of other rules that allow you to do things that are illegal if you don't have that security interest. And here, repossession, that's going to be your problem. It keeps doing that. I thought it was solstice. Okay. All right. So let's talk about scope and start working the problems. Actually, I'm just going to call on people. That's just easier. Everybody should have prepared. You all know that this is coming. We have a lot of problems. A lot of people are going to get to speak, so hopefully this won't make anybody too anxious, and we'll just work through them, okay? Sound good? All right. And if I ruin your name, sorry. And if I forget your name, sorry. Both of those things are likely to happen. Terrible things. I go to parties, I meet people, and the very first thing my brain does to me is it makes me forget that person's name. They will look me in the eye and say, "Hi, my name is Bob Jones," and I will go 2 seconds later, "Who are you?" It's that bad, it really is. Okay, so Taylor Bacchus, hello.
I think she dropped this time.
Oh, see, I have an old list, so I guess we will just not hold her to answering that question. All right, how about Nathan Bearden?
Great.
All right, let's work through problem 2, all right? So,
I think she dropped this time.
oh, see, I have an old list, so I guess we will just not hold her to answering that question. All right, how about Nathan Bearden?
Great.
All right, let's work through problem 2, all right? So we're on the scope section. Why do we care about scope before we get into the problem?
Just to see which type of transactions will be covered in Article 9.
Okay, so let's work through this problem together. Describe it to me and tell me what your conclusions are.
Okay, so basically, there's a state statute that gives Mr. Baker or Max Garage a lien, an artisan's lien on the bill. And so the first question basically asks if Max Artisan liens an Article 9 security interest, and my conclusion would be no, because Article 9 doesn't apply to statutory liens. And then the second question is basically.
All right, so let's stop right there. What section of the statute says that?
Let's I'm assuming it's D2 since that's where it says.
Perfect. And so what does D2 say to us?
It says a lien other than an agricultural lien given by statute or other rule of law.
Bingo.
Yep.
So why do you think this is important?
Well, just, I mean, we already determined that scope is important, so determining that statutory liens aren't covered by Article 9 is.
Exactly. And if a statutory lien isn't covered, what does that mean in terms of the analysis we're going to do if we have a statutory lien?
Basically, if we see a statutory lien, we know we don't go through the Article 9 like steps.
That is perfect. That is exactly what we're talking about. Now, we will find later in the semester when we talk about priority, we do have to worry about the relative rights of the parties, and Article 9 may kick in there. But for what you do to get your lien, what the lien means, how much, what the value of it is, all that, separate statute. So that statute, because it's what we call a mechanics lien, Article 9 doesn't interface with it, and we know that because of D2. So we don't have to worry about any of the Article 9 provisions. Okay, now you were continuing. What's the second part of this
Okay,
question?
so the second part asks if Mr. Baker had signed a statement saying, giving Max Garage a right to repossess the car if the bill wasn't paid, and if that would create a security interest, and it would because of 9109 and 81.
And explain that to me. Let's work through that. So 9109A1, what part of that language makes it a secure
The
transaction?
contract portion. So basically, if the transaction is created like the contract creates the security interest in dealing with personal property, like a transaction.
All right, and we saw, I think if we look at the comments to 9109, I think the very first comment, it says, here, right? Oh, that's right, this is Westlaw. For cut and paste, okay. how do we commonly refer to these kinds of transactions when someone says, hey, I'll give you a security interest? What do we call it? If you look at the comment, as to which transactions give rise, the definition must be consulted when, the sentence before that. Under subsection A1, what kind of liens?
All consensual security interests.
Again, coming back to this idea that you have to voluntarily enter into it in order for it to be a transaction covered by Article 9. And if you voluntarily enter into a transaction which creates a security interest, it's a consensual lien, it is covered by Article 9. Okay? Same car or same collateral, same parties, two different results based on how they interacted. With the statute, was there any agreement?
Yes. There was an agreement, but it wasn't consensual, it was mandatory.
Okay, well, in fact, one of the things that we have to understand with statutory liens and mechanics liens is there doesn't need to be an agreement. It's the mere fact that the person does the work that creates the mechanics lien. So the statute that we have in this case says if you do this work, you get a lien on the collateral. You don't have to, the debtor doesn't have to agree. It just happens. It's by operation of law. And that's what makes it non-consensual. It's automatic. When we levy, when we send the sheriff out, is that consensual?
No.
No! Nobody wants the sheriff kicking in their door and taking their stuff. That is not consensual. Good. Questions about that before we move on? This example shows, the purpose of this question is to very straightforward show you if there's an agreement creating a security interest, it's 9109A1 covered by the statute. Okay. We'll talk, I'll mention a couple of things here and there about what the consequences of that are, but for the most part, that's the rest of the course, right? Just right now, we're just asking, is it covered by Article 9? All right. Should I jump around? Would that be better? Really make you nervous, or go in alphabetical order? Hands up if you want alphabetical order. Yeah, the names are at the end of the alphabet, aren't they? Yeah. Well, that wouldn't be fair. Ross Neely.
Oh, man.
That's a good one. All right, let's talk about problem 3 then.
All right, so problem 3, so we have Brown's Fresh Farm Vegetable Roadside Stand. They sold their accounts receivable to Night Flyer Finance Company. And then I guess the question is that a secure transaction? And I have that it is.
And why do you determine that it is?
According to 9109A3, where it says a sale of accounts.
Okay. So, this is one of these examples where we have an exception. A2 through 6 are examples of transactions that we might not categorize as consensual agreements creating a security interest, and nevertheless, they include them in the statute. Okay? All right. So, is this an account? How do you know it's an account?
Well, let's say it's an account receivable, so it's people that are paying on account for purchases.
It's a very unfair question. It says it's an account. I make this point only because on exams I will say things like, so-and-so sells an account. And then I will have students who will spend a page telling me what an account is. I told you when it's an account. Don't tell me what I told you is true. If a problem says something is a fact, trust the person who wrote the problem that the fact is a fact and you don't need to spend 1 second analyzing it. So sometimes I will ask questions where I don't care if you can correctly characterize the collateral as an account. That's not the point of the question. So here and in any exam I write, if I tell you something is true, it's true. Don't write about it. Seems fair, right? That's a gift to you. You don't have to write about stuff I don't want to, So I'm very good about this. I do not, first of all, I don't give points for it, but I also try very hard to get at the essence of what I want you to write about when I write a question, as the casebook authors do too. So if it says it's an account, trust them. It's an account. Now, an account is the Article 9 way of saying account receivable. They are identical. They are the same thing. We're not going to talk about what is an account today. That's next week. Great. So it's a sale of an account. Why do you think they did this? Why do you think Article 9 is written in such a way that sale of accounts, which are not necessarily consensual security interests, right? Not a transaction intended to create a security interest. Why would it be included?
So probably that apply to goods, for one, I think would.
Well, an account's not a good, well, again, that's next week.
Okay, but would you say that would be an account for being off purchases of goods?
So I see what you're saying. So this is a sale of an account, right? Okay. So what's the sale of an account? Let's talk about that. What do you think that means?
I think that would.
You're a store owner. You have an account with a customer.
Yeah, I'm purchasing their account receivable, so I'm purchasing, I guess, would be future earnings.
Yeah, a right to payment, right? An account is a right of payment, an obligation that someone owes to that store. So it's just it's an IOU. That's all it is. Okay. There are two kinds of transactions that we are looking at here. It can either be one where they say, hey, I'm granting you a security interest, or B, I'm selling you my account. For some reason, the drafters of the code decided that sales of accounts would be treated like clearly consensual liens on accounts. Why would that be, do you think? Yeah.
We need to give notice to parties.
This is the Ratner case all over again. Not Ratner, Ratner, yeah. It's the Ratner case, the secret lien problem. In the lectures I talk about, sometimes the code drafters did things for practical purposes, not for, did for practical purposes as well as policy. Here, this is a practical point. It's hard to distinguish between a sale of an account and a lien on an account in terms of how the transactions happen. And in particular, accounts are intangibles. So how do you know someone has an account? How would a business record an account?
The books.
You look at the books of the company, right? So they're going to say, what's the debtor's name in this case? What would the account holder's name? In the problem, it's
Like it's Farmer Brown vegetables.
yeah. So Farmer Brown owns the account, and they've been selling to their customers. So they're going to have in their book, Smith, 50 apples, Jones, 25 pears, right? And they're going to say, owes me, $50, $100, $2,000, whatever. So that's what's going to be. Well, where is that? In the books. Where are the books kept?
The offices? I mean, that's an
Whose
asset.
offices?
The companies?
The company who has the account
Yeah.
keeps the book in their office.
Right.
So if you're a creditor of a company that has accounts, how would you discover what accounts they have?
You have to, I guess you would audit their financial statements, et cetera, because that's an asset that they have.
You
And
have
you
to-
wouldn't know how much they have, so
Yeah.
would you give them money and stuff?
You would have to physically go look at that book, right? Or if it's on the computer, you'd have to have access to that computer. There's no obvious way to tell what's going on with these accounts and if they've been assigned. So they made a practical decision in drafting the code, which is we're just going to treat all sales of accounts as subject to Article 9 under 9109A3. Okay? Does that make sense to everybody? I want to make sure you understand. Again, we're going to talk a little bit about the definition of accounts next week. But an account is essentially just a promise, a bare promise to pay money. So that account is very difficult to see and verify and, as you described, audit. So they just said, well, what do we do? We just make it an Article 9 transaction, and that means you have to file a piece of paper with the Secretary of State's office. Everybody knows that the account was sold. Easy. Nobody's confused. Yeah.
So I understand the practical administrative side, why we need to bring these accounts into the light of day, but they're essentially, I'm assuming they're unsecured. Right?
Here. Yes, if it is a secured debt, it is not an account.
Right.
Again, I don't want to get into the weeds on definitions, but by definition, an account cannot be a security interest.
It's just an IOU.
It's just an IOU.
Okay.
Can IOUs be oral?
Yeah.
Sure, absolutely. There's no formality required for an IOU. Literally, Farmer Brown can write in on a piece of paper, Smith owes me $2,000. And that's the only record of the existence of the account, and it's not even signed by Smith. Right? Smith may say, yeah, I never bought that stuff, and then we'd have a litigation over that.
But once that gets sold to a third party, it has to go through Article 9.
So it's sold to a third party. What does that mean? What does it mean to sell an account to a third party? Mr. Neely, what do you think that means?
To sell an account to a third party, I guess it would.
Night Flyer. When Night Flyer buys an account, what is it buying?
be buying their debt.
Yeah, they're just, essentially, we're transferring over payment from one party, from Farmer Brown over to Night Flyer. That's all we're doing. That's what a sale of an account is. And it's an assignment of the debt obligation over to somebody new. Yeah.
Okay, so there's nothing, like with the other secured transactions, there's nothing that Night Flyer could go back and, there's nothing that Farmer Brown could default on. And nothing-
Right.
Right, okay.
Correct. There's
So-
no loan.
Okay, so even if these debtors that are on the accounts don't pay Night Flyer, that has nothing to do with Farmer Brown.
That is another really good question. What's the difference between a security interest in an account and the sale of an account in terms of collection rights? Okay, so here's the difference. If I buy property and then I sell it later, I get to keep all of the value from the sale. If I have a security interest in property and I collect on it, I foreclose on it, and then I sell it, I only get to keep what I'm owed. Right? So if the account's worth $100, but I'm only owed 50, I gotta pay the 50 back to the debtor. Okay, because it was their property and I sold it and I got paid off. I'm owed 50. But if the debtor sold the collateral to the other person, they get to keep everything that they collect on. So that's the difference. And Natalie, this is exactly right. This is the difference between a sale and a loan. A sale is transfer of title, and the person who buys it owns all rights to it. That's not what a security interest is. Notwithstanding that, the drafters of the code included those sales as well. Yeah. Because of the problem of secret liens, because we don't know, because it's hard to verify the information, they're intangible assets, it's hard to tell. Right? Now, it's not all intangible kinds of property. It's the 4 that are listed in the subsection. Right, so let me pull it up again here. We've got sale of accounts, chattel paper, payment intangibles, and promissory notes. So, in a similar way, if there's no loan but I sell a promissory note, the person who buys the promissory note gets to keep everything that they collect on it. If it's a loan secured by a promissory note, they only get to collect what they're owed, and then they have to pay the difference back. I'm glad you know that. I can assure you we will look at this again under default, okay? So that's not something you need to know for today. That's just one of the reasons why scope is important. Was there anything else in this question that you had to look at? So the one thing I just want to go back to 109 here and look at the comment and just understand that they explain all of this, right? What I just told you, the drafters of the code explained in comment, right? It's been successful in avoiding, right here, approach has been successful in avoiding difficult problems of distinguishing between transactions in which a receivable secures an obligation and those in which a receivable is sold outright. The distinction is blurred. You don't have to understand why it's blurred, just understand that the way commercial transactions occur, sometimes it's hard to distinguish between a sale and a lien on an account. We were all good here? Any questions about that? And if I said something that you're confused about, ask questions. That's what we're here for. Excellent. Next week, when you start looking at the materials for next week, we'll have lots of fun figuring out the differences between different kinds of collateral. We're not going to comment on that. All right, let's look at problem 4. And how about Mackenzie Horn?
Hey.
Hello, how are you?
Okay.
How's your foot?
It's okay.
All right, sorry you're on crutches, that's no fun.
So the first part, I think it's not a transaction governed by Article 9.
All right, describe to me, what is the transaction?
So Dickens agreed not to use any of its property as collateral for debt to other creditors,
So that's the negative pledge part of this?
I guess.
Yes.
Yeah.
So the negative pledge is, I promise I won't give someone else a security interest. I'm pledging not to create a security interest. So you don't think that that's covered by Article 9?
I could be wrong. I
No,
don't know.
no, but tell me why.
So honestly, I didn't do the problems. I'm just like remembering from the videos and the reading, so I could be totally off.
Well, let's take a look at, we're looking at 9109A. Does it fall into any description in there? And we're really concentrating on the 4 first sections, 5 and 6, we're not really going to do too much with.
No?
It's not an agricultural lien, right? A negative pledge is not an agricultural lien, that's obvious. There has to be some kind of farm product involved. Is it an account? Is it a debt? Is a promise not to pledge your collateral a debt?
So it could be a negative promise?
Sure, but is there an obligation, is there an amount of money that's owed?
Yes? No? I don't know.
Well, let's distinguish the promise of the underlying loan from the promise not to create new security interests. And that's the part that we're wondering, right? The loan part is not a security interest at all, right? If you owe money, that's just a debt. So the additional promise is, I agreed not to create new security interests. It doesn't sound like it fits in any of those, does it?
No.
No. So your initial reaction, I think, is 100% right. It's not a transaction that creates a security interest. You have to create a security interest or be covered by 2, 3, or 4. It's not a consignment. I don't think it's a sale of anything. You're not selling the right to not create a debt, so therefore there's no sale. That's easy. So you just work through these. Is it a transaction that creates a security interest? No, it's the opposite. It doesn't create one, it prevents one. It's not an agricultural lien, there's no farm products involved. It's not the sale of an account, a chattel paper, there's no sale, and it's not on a consignment on the definition of those terms. So, I think your answer is correct. It's not an Article 9 transaction. How about the second part of this, though?
I want to say that the second part makes the answer yes.
It's a little closer, right?
Yeah.
And what's the language in there that makes you think that maybe it's a security interest?
That he agrees to pay the lender the sum of money, and that would be, I think it makes it a transaction.
It certainly is a transaction, right? I agree with that. But what kind of transaction do we have to have?
That creates a security interest,
Does this create a security interest?
maybe. Yes.
Well, what is a security interest?
I don't remember that part.
Anybody? What is a security interest? Ooh, I stumped you all. Excellent. What's a security interest?
Interest in personal property and fixtures which secures payment or performance of an obligation.
So it's an interest in personal property which secures repayment, right? Is there a personal property interest here?
No. Yes.
No. I'm saying if
Okay.
there isn't, what does that mean?
That it's not a transaction.
It's not a security
Not a
interest,
security
right?
interest.
So therefore, you're not having a transaction that creates a security interest. So you have to have an interest in property that secures repayment of an obligation in order to have a security interest. We have a contract. There's an agreement here. There's no question about that. The question is does it create a security interest in personal property? Is a promise to find money from someone else a property interest?
No.
Could it be a contract right? Could it be a contract right?
No, maybe.
This is a very poorly written agreement if this is an agreement that attempts to create a security interest, right? This is a bad document. And the fact that we have to think about this at all means that the person who wrote this committed malpractice. Because in this area, you shouldn't have to think. You should just have to read and then plug it in, and if it fits, it fits.
In the last sentence of that where it says that he agrees to sell inventory and equipment in order to repay, is it not a security interest because he's not saying that they would get possession of that stuff? Okay.
So the security interest is the right of the creditor, the secured party, to be able to sell the property.
Okay.
And what's the promise that's being made here?
Just that they would come up with some money.
Yeah.
Come up with the money somehow.
Yeah.
Okay.
Yes. Now, contracts, some kinds of contracts can be personal property subject to Article 9. Chattel paper is a contract that is subject to Article 9. It's collateral, can be collateral. Okay? This is just such a weird contract that doesn't clearly create, it's not the kind of contract that we would normally see you would have a security interest in, because it's not, it's poorly written. Your struggle with this was intended by the authors of the casebook, so you did a great job. I agreed with both of your answers. The maybe on the second one, maybe, but it's a weird contract if it is one. The promise that you will sell your property so that you could pay off the loan is not a security interest. Sure.
Generally speaking, though, is inventory even really covered under Article 9?
It absolutely is.
Okay.
So let's take a look at on 102, and we're going to see. I'm jumping ahead. This is next week, but you asked a great question, so I just want to make sure I give you an answer. We go to the definition of goods, which is a little bit further down than I realized. Goods means all things that are movable when a security interest attaches. Okay? And inventory means goods. Yeah. So I'm curious why you asked the question about why, so inventory. So it was the promise to sell inventory?
I was kind of looking at notes from earlier and I got confused because there was kind of a mix-up with a problem with consignments.
Okay.
Yeah, so I guess when you get to that,
We'll talk about it. Okay, good. All right. Do all feel good about this? The answer isn't that no contract can be property subject to a security interest. That's not correct. There are contracts that are absolutely collateral for loans. An example is an account, and that's a contract, right? But this contract is a weird one, and it doesn't seem to fit the pattern of what we're looking at here. So the answer is maybe. If the answer is maybe, can I tell you what you should do? File the document. File an Article 9 financing statement. Just in case a court comes back and says, yeah, it's an Article 9 security interest. You didn't file, you lose. When in doubt, file. That's always the rule. When in doubt, file. That's what a good lawyer will do, is they'll say, I feel queasy about this, therefore I'm going to advise you to file the financing statement. Then you don't have a problem. You're covered. Okay. Problem 5. Antiques are us. So how about Channing Cox?
Okay.
All right.
So the Antiques R Us store is a consignment store. I didn't do this problem, so you're reading along with me.
I can come back to you next class on one of the problems. Would that be better?
Yes.
Okay, sure. Do I have a volunteer?
Oh, okay. Well,
Oh,
yeah, sure.
Well, you raised your hand.
Yeah, I had some questions too on 9-102, like on the consignment part on the 20. So is not an auctioneer, how do we know, like, so the problem would just tell us if they're an auctioneer, kinda?
All right, so you want to take a look at the definition of consignment.
Yes, sir, please.
So let's do that. Means a transaction regardless of its form in which a person delivers goods to a merchant for the purposes of sale. Do you understand that first part of the?
Yes, sir.
That makes obvious sense, right?
Yes, sir.
I'm giving this property to somebody else, I'm saying, here, sell it for me.
Yeah.
Okay.
So, and that's what I
It-
feel like,
eBay is kind of a consignment situation, isn't it?
yeah.
Yeah.
Okay.
eBay does not own the property. You're giving it to eBay to sell for your benefit. You're still the owner of the property when you put it up onto eBay.
Okay, and so even if they take part of the money or something,
Yeah.
okay, and that's how they make money. Okay, so
Yeah,
that,
the financial part of the transaction isn't what's at issue. It's the nature of the relationship to the property, right?
okay.
The person, right, regardless of its form, in which a person delivers goods to a merchant for the purpose of the sale. That eBay doesn't, you don't actually send your property to eBay, but I was saying eBay is selling stuff for somebody else.
Yes.
So it's a store where people collect personal property and then they sell it for other people, but they never take title.
Yes, sir.
Okay, so now you're asking about is not an auctioneer.
Yeah, so.
Why does that worry you?
Because what they did, if I can't tell, because if it's not an auctioneer, then this, if they are an auctioneer, then this wouldn't be consignment, so it's not
Right.
secured. So it's not Article 9, right?
Right, if they're an auctioneer, Article 9 doesn't apply.
Yes, sir. So, and that's so.
Anybody here ever gone to an auction?
Maybe.
All right, how do we know it's an auction?
An auctioneer?
There's a person who
Oh,
stands
yeah.
up with a gavel, right?
Yeah.
Right? Going once, going twice, that's who an auctioneer is, okay? It's not a store
Okay.
where the merchandise sits on a shelf. That's not an auctioneer. An auctioneer literally is somebody who stands up in front of a room of people who are thinking of buying property and says, okay, I got this wonderful podium here, going for $10. Anybody? 10, 10, 9, 9, up, $9. That's an auctioneer.
So, okay, so in this
So if I
case-
write a problem where there's an auctioneer, you will know because I will give you enough facts to understand that that's what the person's doing.
Perfect, okay,
Yeah.
yes, sir.
Or I'll say he's an auctioneer.
Yeah,
Yeah.
because here I kind of had questions about the sale. So Antiques R Us was the largest antique store in the city, and they're well known as a place where antique dealers could basically do consignment stuff, could hire out space so the dealers rent the space and exhibit their items, and then the store handles the sales. So the store does all, so basically sells the stuff, and taking a commission. And then the store takes a commission on each and returns the dealers the remaining items. So do the dealers get paid though? Obviously, right? Okay. And then so the store takes out a loan from Octopus National Bank.
So who's the bad guy here?
This,
Octopus National Bank, right? What are they trying to do? What is Octopus National Bank trying to do in this problem?
to create a security interest.
Well, they're arguing they have a security interest, but what's the problem? What are we worried about here? Who is upset by ONB claiming to have a security interest?
If they have to collect the money, right? Or if they have to.
Yes.
What's it called? Defaults.
So whose property are they trying to take?
They want to take Antiques R Us property, right?
Right, and the question is, does Antiques R Us own the property that the dealers are selling?
No, sir. Just
Okay.
the building.
So, if it's a consignment, what does ONB have to do?
Okay, wait. If it's a consignment?
Yes, if it is a consignment, is it subject to Article 9?
Yes.
Yeah, and if they've taken all the steps necessary, they've got the right paperwork, they filed the financing statement, can they take the dealer's property?
I didn't think that they could, but.
Well,
but
that's the interesting question, right? That's
Okay.
that's why this is at issue, right?
All right.
Can they take the dealer's property? That's the question. ONB is the bank. By the way, banks aren't evil, right? I work for a bank. Bankers are nice people. They deserve to get hugs, right? Anybody here ever work for a bank? Yeah, banks, there's a bunch of nice people in banks, right? The teller at the bank, right? They're not bad people.
You got candy?
The fact that they take your property and sell it, these things happen.
Yes, sir.
ONB has a security interest in the antique store's property. Does the antique store own the things that the dealers are selling?
No, sir.
So that sounds like they're that O&B is taking somebody else's property that they don't have an agreement with, right?
That.
Feels like theft, doesn't it?
Yes,
Yes. But Article 9 includes consignments, doesn't it?
Yes, sir.
Under what section?
The first part, 1, 2, I don't know. Yeah, 1, 2,
19102.
4. Yeah, 1.
So what is a consignment?
It's the giving of goods to someone to sell it, basically.
Yes. Now there are subsections that are exceptions that say even though it is the first sentence applies, then there's things that take it out of that definition. If it's not a consignment, can O&B go after the money, can go after the property that the dealers are selling at the antiques place?
I want to say no.
Absolutely right.
Okay.
So this is the evil with consignments. Evil in the sense of if you're the person consigning the property, you feel like you've had your stuff stolen, right? If O&B files the right paperwork to cover the property that is located at the antique store, and then Antiques, what's the name of the place?
Antiques R Us.
Antiques R Us doesn't pay, what is O&B going to do? They're going to foreclose on all the property subject to the security interest. Does the security interest cover the goods that is located at Antiques R Us that someone else owns?
Only if they're consignment, right?
Yes. Antiques R Us does not have title to the property located on its facility. Somebody else owns that property. Even though that's true, Article 9 says it's an Article 9 transaction. And it's subject to the security interest can cover that property. So I own the property, Antiques R Us is selling it for me, and then all of a sudden somebody swoops in and takes it away from me. Yes, you had a question?
I believe when it talks about, if we go back to the definition.
Yeah.
It talks about if it's known by the creditor.
Oh, well, we hadn't gotten there yet.
Okay.
But
Yes.
what does that mean? So what happens if it's known by creditors to be a place that sells things
Takes
on
it out
consignment?
of consignment.
It's still a consignment.
Oh, okay.
But it's not subject to Article 9.
Article 9. Okay.
It's not an Article 9 consignment.
Yes, sir.
I just have a question. Is that where perfection of it comes in, where they file this?
And we have not studied that at all. We don't need to know that for today. All we're talking about is scope. Those are great questions that we will answer. Cross my heart. Because if you don't know the answer to that question, you're not ready for the bar exam. So my goal is to get you ready for the bar exam. Yes?
So basically, if the bank knows that Antiques R Us deals in consignments regularly, they should know that property, they could have a security interest over that property.
There you go. Does everybody get that? It would not be a consignment under Article 9. It falls out of the definition of consignment. The problem is, remember the secret lien problem, right? If I'm a bank and I go into the store and I'm lending to Antiques R Us and I look around and I go, man, they got a lot of stuff. Tons of collateral. How much money do you need? I'm willing to give you $100,000. Turns out, other people own that stuff. And I don't have a deal with them. I'm the bank. Have I been misled by Antiques R Us? By the structure of its operation? Yeah. So how does Article 9 protect people under those circumstances? Well, one, if I'm a creditor and I know this is a consignment operation, I can't go, oops, I didn't know. I'm not allowed to do that. Also, does it cover consumer consignments? The definition of consignment, does it include consumer consignments? No. So the average citizen doesn't have to worry about Article 9. Does it cover low value consignments? No. So if these things are worth $50, they're not covered. So it's merchants who sell high value items through consignment at a person who creditors do not know they're selling stuff on consignment, is not an auctioneer. And what's the last one? There's 3 subparts to that exclusion. Sorry?
No security interest.
Right, and doesn't create a security interest. Yeah. It's not a security interest agreement. Right.
The creditor would be trying to show that it should have been filed under Article 9.
Who should file?
The store or the.
Yeah, we haven't answered that question yet, but I will give it to you. So here's the answer. In order, in a consignment situation, to protect yourself, if you're the consignor, the owner of the property being sold on consignment, You file an Article 9 financing statement, and that lets creditors know that it's your property, not the store's property. But we haven't done this yet. This is just scope. Okay? We will come back to all of this. These are all great questions. Today, we just want to know, is it covered? So the answer is no, because the creditors know that this is a company that does consignments. Questions about that? Did that answer your question? You said when we got to the question on consignments that you were confused. Did we get you an answer that works for you? And is this a question you thought?
Well, no, I actually just misread my own notes.
Oh, okay. All right. Everybody good? You bet. Go ahead.
I just wanted to clarify. So you said like if the creditor knows the place that's substantially big, so not covered by Article 9?
It's not a consignment covered by Article 9. It may still be a consignment. It's not a consignment for which. So remember, who is it that has to protect them? And how do they protect themselves if they're worried that it's a consignment? They file a financing statement. Okay? They put a piece of paper on public notice. OMB comes along and they see this document and it says, the property that's located at Antiques R Us, not owned up by Antiques R Us. Now OMB can't say, didn't know, because they do know. It's on, they have constructive notice of the fact.
So if they don't, if the person that has the title doesn't file that paper,
They lose their property.
and what would OMB have to say, we didn't know that that place was engaged?
Yes, and that would be in the litigation between the person who delivered the property and OMB. Antiques R Us couldn't care less. In fact, the more of somebody else's property that's used to pay off the loan, the better for Antiques R Us, because they get to keep more money. They're like, yay. Antiques R Us is not concerned about this.
So I have a question about consumer goods.
Yes.
I know the definition of consumer goods, but what's an example of something that would not be a consumer good?
Everything that falls outside of the definition of consumer
like,
goods.
would that be-
That's terrible, right? A farm product would not be a consumer good. Inventory would not be a consumer good. Next week, starting tonight, you'll look at the video, you'll learn how to make that difference. Yeah, the next reading will tell you.
So would that be like if somebody has a hobby business where they like?
We got a question next week about this. Yes,
The
great.
same thing?
Yes,
Okay.
exactly. Yes. I don't want to spend too much time on this because we are going to this. These are great questions. Next class will answer them.
So the question was just a little wordy, and you did hit it though. So, it just says that if the dealers have never taken the steps required. So, if they didn't take the steps required, bank could go OMP or OMB could go after the stuff in the store. Okay.
What they do is they foreclose on the stuff in the store that somebody else owns, they sell it, and it pays off the loan to them, yay. The money, now, who is the debtor in that situation? Would Antiques R Us be the debtor about this property?
About the property that's
Yeah.
not theirs?
Yeah.
Yes, and...
And also the owner, right? If you own the stuff, do you have an interest in the property?
Yes.
So there are rules about who gets extra money if there's more, if the debt is paid off and there's extra money lying around. So you may not get zero, you may get some after the sale. We haven't studied those rules yet. Okay, but it's not necessarily a complete disaster, it's a very bad outcome. But understand, since it doesn't cover consumer goods, the people who we're talking about here that are worried about this rule are merchants or businesses. So should we expect businesses to be more sophisticated about how this stuff works? Yeah. Why are we feeling sad for Amazon and Walmart and places like that? I don't care.
So because there's that statement in there in this question that says well-known as a place, are we supposed to say that even if they didn't file under Article 9, it should be okay?
Yes, because under the definition of consignment, it's not covered. That's exactly the outcome. Okay. What is a consignment? We will talk. I have a lecture on, so you will get this again for next week. But this is just generally speaking. Okay, so that was problem 5. Thank you.
Thank you.
Problem 6. Who here is I'm happy to take a Star Wars fan here. Luke Skywalker. Anybody a Star Wars fan? Okay, here we go.
I like Star Wars.
Yeah.
So I don't think this is a consignment covered by Article 9 because of the jeweled sword is probably a consumer.
So say that again, explain, give me the, start over again.
Okay, so Luke Skywalker has this bejeweled sword
Yes.
that he wants to sell. And for it to be covered by Article 9, it has to be worth more than $1,000 and a consumer, not a consumer good. And although it's worth more than $1,000, a bejeweled sword is a consumer good, so it's not covered by it.
And let's start with this principle. The general scope of the kind of transaction we're talking about is a consignment, so it is covered by 9109A4, but the definition excludes it.
Yes.
Yeah. Everybody see that? Yeah. I thought he was in the Rebel Alliance. Doesn't that make him, maybe it's not a consumer good, maybe it's his weapon.
Yeah, I don't know. In that case, I guess it's...
Maybe it's equipment.
Yeah.
Sounds a little weird, but could be, right? Luke Skywalker, an artisan who crafted his wares. Is he a consumer?
I thought he was.
Well, he's in the business of making swords.
So I guess maybe he himself isn't, but the people buying, like the sword and stuff would be...
Ah, no.
No. Okay. I don't know.
No, and you don't know this yet.
Okay.
And the reason is that we figure out what the good is in the hands of the person who is creating the interest.
Okay.
So he's an artisan. If he's an artisan who makes swords, is this a consumer good to him?
No.
It's his inventory. So is it over $1,000?
Yeah.
Do people generally know that this company operates as a consignment seller?
Yeah.
Well, what did the problem say?
The problem...
Does WOW generally understood by its creditors as being...
I believe so. I lost the page it was on, but I think it was.
What page is the problem on?
47. I don't see that in there anymore. It says which mostly sold items, so yeah, I guess, yes.
So is it covered?
No. No, I'm turning around. Yes.
Yes, it's
Yes,
covered.
it's covered.
Is that, what did everybody get? It was an Article 9 consignment. Yeah. I think, and the problem, and the reason they said he was an artisan is to let you know that he's not holding it for personal, family, or household purposes. If he's a collector who doesn't resell, then it's a consumer good. But he makes them and sells them. That makes it inventory for him. Yeah.
Okay.
He's a merchant. Would we expect him to know that he has to file an Article 9 financing statement in order to protect himself? Yeah, unfortunately we do. Small businesses are covered by this as much as large businesses. Yes?
So for right now, it would have been okay if we said, because we didn't know if it was a consumer good or not, we just said if it was, then this, if it was not a consumer good.
Yeah, sure. By the end of the semester, you will be able to answer that question because he's an artisan. And that's the trick, right? He's somebody who makes these, not for personal use, for sale to others. And I have to give you those facts, right? If I don't say that, how could you possibly know? So I have to tell you this stuff. So, it may happen that I write a question and I forget to do a good job explaining something, then your answer is exactly right. I can't tell, and there are two different outcomes. Hopefully and maybe that's what I was testing yet. You could see the difference. If I tell you, just go with what I say. So here it says artisan, that means he's not a consumer. For him, this is not a consumer. All right. Thank you. And you are?
Keith Stewart.
Let's look at problem 7. How about Lucas Taylor? Hi.
Hi.
Let's do problem 7.
So in this one, Big Machines has leased a duplicate, I guess, a copier to Connie's Print Shop. The lease is for 5 years. The rental payments are due over the period to equal the current market price. At the same time, Connie's Print Shop borrowed money from the bank and signed a security interest. And then the print shop went under, and then the bank, I guess, collected all of the print shop's equipment, which included the printer. So now it's a battle between the bank and Big Machines to determine who gets the machine. properly filed, whereas Big Machines did not, so it was not made known, therefore, I think that's.
In order to get there, you have to make a decision about the underlying transaction we're talking about. And there's two possibilities. It is structured as, what is the name on the top of the document? There's a contract about, it says lease. Do we believe people when they write it's a lease?
Yes.
Well, so the answer is maybe, right? And that's what the point of 1203 is, right? So on page 29, there's a nice little summary of how 1203 works. I think if you understand the summary, you get the gist of how this works. Was it a lease? Was it a true lease? If it's a true lease, is it subject to Article 9? No, it's not. Correct. So here's what happens. Debtor has two contracts. Loan with a bank with a security interest that covers equipment, and it has a lease with a company that leased them the copier. If it's a true lease, can the bank take the copier to pay off the loan?
No.
If it's, so, did everybody understand that? And that's because who owns the copier?
Big Machines.
In a true lease, the property, the personal property, is owned by the lessor. So it shouldn't be the case that someone else can swoop in and take their property, right? It's just like the consignment situation. But we don't know. It could be a lease intended for security. Why would somebody call something a lease and in their mind go, but it's really a security interest? Why would they do that? In the reading, do they explain, so what law governs whether or not you want to structure a transaction as a lease or security? Or a sale?
What law?
Yeah, is there a law that one is preferable over another? One of your guys wants to chime in? Tax law. If you lease property, you get to deduct the payment of the lease against your current income. If you buy property, you can only depreciate it over time, and so your deduction is less obvious, less clear, less straightforward. Okay? So there's tax reasons why you might structure something as a lease. In addition, the IRS might respect something as a lease even if it's intended to be a sale with a security interest. They might say, did you put lease on the top? Okay, you're good. And they won't ask any more questions. But in Article 9, we can't be that flippant. We have to ask more questions. So the question here is, was this a lease intended as security or a true lease? And how do we know if it's a lease intended for security or a true lease? What do we have to examine?
There are three factors right here.
And I just called on you, and I cannot remember who you are.
Lucas Taylor.
Lucas Taylor. I called on you, and I forgot your name. How bad is that? That is just ridiculous. It's distressing for me that I can't remember. Try very hard. Okay, so is it a true lease, or is it a lease intended for security? How do we do the analysis?
Well, there are three factors here that are given on page 29.
All right, and so let's work through them. Tell me whether you think that this is a true lease.
So the first one, at the end of the lease period, the leasee becomes the owner of the property for little or no consideration. It's a secure transaction, which that's not the case here.
So let's look at the statute too, because I think this is also helpful. So 1203, which is the section on leases, says a transaction in the form of a lease creates a security interest, right? So we're going to say we don't trust the form, we're looking at the substance. If the consideration that the lessee is to pay for the lessor for the right of possession and use of the goods is an obligation for the term of the lease and is not subject to termination. Is this one subject to termination? Okay. And we need something else. Second, the original term of the lease is equal to or greater than the remaining economic life of the goods.
That's not the case. Sorry, it's equal to, yes.
Or how about 4? The lessee has an option to become the owner of the goods for no additional consideration or for nominal additional consideration upon compliance with the lease agreement. How much do they have to pay to own it at the end of the lease?
Oh, the market price?
Yeah, what do they have to pay in this problem?
I guess just the market price over, $5.
It's $5 nominal. What does it mean for consideration to be nominal? Do you recall that from your contract class?
I know, boy, he said $1.
I can tell you $1 is always nominal. For a major commercial copier is $5 nominal. So we get there under 1203B4. They can't terminate early and there's nominal consideration. That means this is a security agreement, not a lease. What does that mean? As between the two creditors, who wins?
Then Big Machine.
Did they file any documents? So they didn't comply with Article 9, so who wins? Yeah. And we haven't studied priority yet, but that's the consequence. If it's a lease actually intended for security, that means you have to follow Article 9. If you follow Article 9, you have to file a piece of paper. If you don't file a piece of paper, you're unperfected. If you're unperfected, the perfected secured party beats the unperfected secured party. You will learn this and know this later, but that's what we're talking about, okay? For now, we're just asking, is this a true lease or not? Okay? Does that make sense? Questions about this?
If not, then unprotected, then what else?
If it's a true lease,
Yeah.
then
File
you don't have to file.
Okay.
If it's a lease intended for security, it's an Article 9 security interest, and you have to file.
And then if you don't, you're unprotected.
You're unperfected.
Oh, unperfected. Okay.
Yeah,
Thank
yeah.
you.
No,
Sorry.
that's fine. You don't know that terminology yet, but that's the terminology. You're unperfected. Yes?
In the third factor that it had for determining if it was a lease, like a
Yeah.
true lease or not, it says if agreement is for entire economic life of the goods with or without renewal, this is a disguised sale?
Yes.
What does that mean?
So, they're not actually leasing the property, they're actually selling it, and they're calling the sale a lease.
But that's not a secure transaction.
It is, if they're trying to claim if they're trying to claim the right to get the property back, it's not actually a lease, so they don't get to get it back because they own it. The only way they can get it back is to foreclose. The lease is rewritten, in essence, as a security agreement, and under Article 9, the only way you can get your property in order to pay off the loan is to foreclose. Or let me say it a different way. The lease agreement, does everybody agree that a lease has a monthly or quarterly payment associated with it? We're essentially saying that's not a lease payment, it's a debt payment. That there isn't a lease, it's a sale and a security interest. A sale with a loan and a security interest. Does that make sense to everybody? Okay, good. Good question. Yeah?
So if Big Machines had filed and complied with Article 9, then
They would have had priority. Think of it this way. In the mortgage area, you can have a first mortgage, a second mortgage, and a third mortgage, right? But if you don't file the mortgage document with the Registry of Deeds, does another mortgagee have a right to say, I didn't know about you and I can foreclose first? Yes, that's essentially what we're saying in the real estate, to look at a real estate type of transaction. Good. Well, we're moving along here, right? Problem 8. What's the difference between problem 7 and problem 8? Again, looking at the factors on page 29. How about Alexis Lara? Did I get, yes. What do you think is the difference between 7 and 8?
Well, I wrote down the life of the machine. So, in problem 8, it says that it has a 10-year life typically, and the lease is only for 5 years, so I would think
So it has a life that extends beyond the term of the lease, so that sounds like it's a true lease, doesn't it? What do you feel about the $10,000 payment?
Well, I didn't remember anything about nominal, but I said compared to like fair market price of the machine, it was $300,000, but $10,000 is nominal compared to it.
Sorry, I'm just going to close the door. So that's interesting, right? Is $10,000 nominal?
Not to me.
So we read a case where they discussed this issue. Wasn't it $78,000 was the payment? And they said it's not conclusively not nominal, because what's the value of the property left over? So here we start talking about economics. So if for $10,000 you can get a $20,000 piece of equipment, is that essentially a nominal payment? Would you ever say no to that transaction? No. So what they're saying is we've got to look at the economics of it. It may be that this is a big number, but relative to the value of the collateral, it's a very small number. You would pay it because you'd be stupid not to. Okay, so there are circumstances with which a number that is not small is still nominal. Does that make sense to everybody? And the way we determine that is, what's the economics of the transaction? Essentially, 1203 is asking, what was the economic deal that was made? Now, we're not economists, and we're not experts in leasing. So what do you need to know? You need to know that this is out there. That if I give you a document and it's called a lease, alarm bells should be going off, going, oh my gosh, is this a security interest or not? And understand how you apply the test. If I include a number like $10,000, I think you'd go, I can't tell. I need more evidence. If I include a number like $1 or $5 or $10 and it's an expensive piece of equipment, that's nominal, right? I'm not going to try and trick you on that. So if I want you to talk about, we're going to look at the economics, I'll pick a big number and say, you'll have to go, well, I can't tell, given the economics of the transaction. If I say $1, it's nominal. And if I don't care for you to do extended analysis on this, that's what I will do. I will put $1. If I just want you to say, oh, it's called a lease, it's really a security interest, okay? I will not ask you to do high-level economic analysis on a test I will not ask you to do high-level economic analysis. I will give you numbers that will allow you to make an argument, okay? But I think your answer is correct. I can't tell. And that's what the court said in the case, right? They said, $78,000 is a lot of money, but maybe the thing's worth $378,000. Well, of course you spend 78 to get 378. We don't know. We need more evidence, and that's what the court said in that case. All right. Oh my gosh, I have 7 minutes left, and we have some problems to go. I will tell you, I was worried that I would have too much time and be done in 20 minutes. And I'm seeing that I was wrong on that, which is good. So problem 9, I'm just going to tell you what the answer is. All right, problem 9 is a subjugation question. And the purpose of this question is just to identify that subjugation is something that's out there. A subrogation could be a security interest. I'm not going to test on this. The problem's there. I'm just going to tell you that it could be a security interest. I know you probably spent a lot of time trying to figure this out, but because of the amount of time, I'm not going to write a problem where subrogation is at issue. I find that too complicated. Makes my head hurt. So I'm not going to test you on that, right? But they wanted, the casebook auditors wanted you to know that these kinds of issues do come up in your life. All right, problem 10. Now we're talking about exclusions from Article 9. So how about, and that was this, so now I'm going to call on somebody over here. Michaela?
Yes.
Hello, how are you?
I didn't do the problems.
How about I call you back next time, and we'll
Okay.
work on it. All right. Peyton, how you doing? Let's work on problem 10.
So for problem 10, I had unknown because cases conflict, as this was intellectual property.
Gotcha. Tell me a little bit about it.
So you have Pollution Solutions, who took out a loan, and for their collateral, they used copyrights, patents, and trademarks with the bank. So it asked where they should file.
Yes.
And so I just had don't know, ask question on that part. So, and then,
Excellent.
But then for the rest of it, there was a note earlier in the reading about intellectual property, and that there was conflicting cases, and that it just kind of depends if you can use that as collateral or not.
Once again, this is an area where federal law clearly preempts state law when it does. But Article 9 in 9109C1 says it only conflicts. We only allow it to conflict. Sorry, let me say this differently. Article 9 only steps back from the law where it clearly conflicts, and then Article 9 kicks in. So what this means is, and I said in my presentation, the document to create the security interest, covered by Article 9. The place where you file to perfect the security interest in Article 9 in copyrights, probably the copyright statute. And that's because if the copyright is registered, there's a system of recording registrations in copyright. And then they created a system for recording transfers of any interest in a copyright. So they created a filing system. So if the federal government creates a filing system, which filing system do you use? The state one or the federal one? No, both. Yes. Probably the court's going to say, for a registered copyright, they're going to say, this is the system you use. Is there any problem? We're going to say, no, you file in state 1, 2, it doesn't matter. But there are cases all over the map on this. Is there a system for recording interest in patents? Yes, there is. Does it talk about security interests? It does not. It is a very poorly written statute as with regards to security interests. It talks about, I think, patent mortgages, or at least patent mortgages are a kind of security interest that existed, but it's not clear. And there are cases all over the map on this. Under the FAA Act, where do you file an interest in a plane? This was the case, right? Where do you file? If the security interest covers an airplane, where do you file?
With the FAA.
With the FAA. In Omaha, Nebraska, by the way, I believe is where it's located. It's the only place you file. Security interests are no good if they're not filed in Omaha. Okay? With registered copyrights, Copyright Office. With patents, probably the Patent Office. With trademarks, probably not. So the point here is, and we'll come back to filing systems later, that under C1, there are going to be circumstances where federal law steps in and creates, and in my opinion, a very crappy system of filing, but it still preempts. Crappy or not, it's the one you have to use, and that's the point of the question. All right, we have 2 minutes. Should we just save the last few for the beginning of next class, or do you want to talk about problem 11 in part B? I think we can do that one pretty quickly, I think. So how about, let's see, Adam Hibbets?
I didn't get that far down the problem.
All right. I'll call on you next time then, all right? And then Dylan Cars? No? Okay. Anna Cervera? Hi. So let's just do this one quickly. I don't think it's going to be too complicated.
So I don't think Article 9 applies in this case.
And why do you think that?
Because under 9109D1, it says that a landlord's lien is inapplicable, or the Article 9 is inapplicable to it.
Okay. Pretty simple, right? That was easy. And Article 9 does not cover landlord's liens. What's a landlord's lien? Did you look that up?
No.
Did anybody look it up? Did I mention it in the lecture? What is it? This is kind of evil.
So it's where they can take your personal property, or the landlord can take the personal property of the person leasing from them if they default on their payment.
So if you ditch and don't pay your rent,
They
go into your property, they take your bed, they take your computer, they take your lounge chair, sell them and pay off your rent. Now, what if the lease agreement said to secure repayment, to guarantee payment of the rent, renter grants a security interest in all personal property located at the name of the place. Is that an Article 9 security interest? Why? What's the difference? There we go. A landlord can create a consensual security interest in property located at the rental property, but they have to do it by contract. If it arises by operation of law, not covered by Article 9. Okay, I will go over the remainder. We have like 5 problems left in this chapter. I'll go through them quickly at the beginning of next class. A couple of you I'll be calling on next class, so just be ready. You feeling good about this stuff?
Yeah. Sorry for choking y'all.
Are you feeling good about this?
So Friday or next week?